How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you to today's briefing where we're going to look at the economic calendar up through the 22nd of March. And there's some heavy hitters coming up to bat. Starting tomorrow on the 7th, Chairman Powell begins 2 days of testimony in front of the U.S. Congress. That's a big deal because things are very sensitive right now. We had the blowout NFP last month, 519,000 jobs added to the U.S. economy, 500,000 jobs. That's of serious concern to the central bank. And so we're going to listen very carefully to tomorrow and the next day to what Chair Powell signals or doesn't signal with respect to how seriously they're going to continue their rate-rising ways. So we go from the 7th tomorrow and the next day, Powell testifying. When we move, of course, this Friday into the all-important, why is it more important than usual, non-farm payroll report on Friday. Now, the reason it's important is for this print right here. Last month, 517,000 jobs added. What does that mean in terms of interest rates, in terms of the price of bonds, in terms of the stock market? It means that if the print on Friday comes out anywhere close to and significantly greater than 200,000, interest rates are going to continue rising and continue rising for a lot longer than the markets expect at the moment. Therefore, we're going to pay very close attention to the NFP on Friday. From there, we move on to the 10th of the month. And let me just reset this. I'll give you the 10th to the 22nd. This, by the way, is the economic calendar I'm using on investing.com, but they're all the same. If we go here, we can just simply set our starting date to March 10th and set the ending date to the 22nd, and we'll have all the data we want right there. We go to the 10th of the month, and we're going to see the U.S. CPI data. And this is really important because this is the 10th of the month. Oh, it's the 14th, my mistake. Not the 10th, I meant the 14th. Here it is. The CPI data in the United States. Now, they measure it monthly but annualize the number. So we know that February's print was 5.6%. The difference between core and non-core is simply a net of energy and food. Consumer price index net of the cost of energy and food is what core CPI is. And the reason core is so important is that we know that the Federal Reserve looks very closely at the core numbers. So this number, in addition to the jobs number, they're all a piece of the same broth, and we're going to show you what that broth really is on this date. Come the 22nd, the U.S. Federal Reserve is going to announce its interest rate decision. That's going to be big news, ladies and gentlemen. The world is pretty much going to cease trading on the 22nd all day until this announcement comes out. And you'll notice that there's not even an expected position yet. It's still too early. We are of the opinion that interest rates are going to continue rising. They're going to raise by more than the 1/4 percentage point they did in the last round. They may up it to another 0.5%. We think inflation is here for a long while, and we think that the long-term interest rate that the Fed is aiming for is, in essence, the long-term historical rate of 5.25%. So they're headed to that at the least. So that's our projection, ladies and gentlemen. That's what we see happening this month, the big, heavy-hitting items. Again, tomorrow and the next day, Chairman Powell is going to testify in front of the U.S. Congress. The 10th of the month, of course, is the big NFP on Friday. Tune in, by the way. We have a live trading event where we trade the event together. On the 14th, consumer price information is printed out in the United States. And on the 22nd, of course, is the next central bank rate decision. So that's going to do it for now, ladies and gentlemen. I'm your host, Seth Julian, wishing you all the ability to trade with confidence. Chalas for now.